Something is happening in the global silver market that doesn't make sense. If you look at the price on your screen right now, you see one number. That's the price set in New York and London. But if you go to China, the story is completely different. In Shanghai, silver isn't just a few dollars more expensive. It's trading at levels that seem impossible to Western investors. Reports are coming in that silver has touched $120 there. Why is there such a massive gap between the East and the West? Usually, these prices stay within a few cents of each other. When they don't, it's called a disconnect. And this isn't just a small glitch in the system. It's a sign that the physical metal is disappearing from Western vaults. For decades, the price of silver has been determined by paper contracts. These are bets made by big banks on where the price will go. They don't always involve the actual delivery of a single silver bar. In fact, there's way more paper silver than there is physical metal in the world. China seems to be tired of playing that game. They are buying up every ounce they can find. When you want the real thing, you have to pay the real price. That's what we're seeing in Shanghai right now. It's a massive wake-up call for anyone holding silver in the US. How long can the New York price stay low while China pays quadruple? Eventually, the metal flows to where the money is. If you were a miner, where would you sell your silver? You'd send it to the place paying $120, obviously. This is causing a literal drain on Western supplies. The COMEX and London vaults are seeing their stockpiles shrink every month. Investors are starting to realize that the paper price might be a total illusion. It's a way to keep the market calm while the physical assets move east. Have you noticed how hard it is to find certain silver coins lately? Premiums at local coin shops are already starting to creep up again, but those premiums are nothing compared to the Shanghai shock. China is basically telling the world that the old pricing system is broken. They are setting their own rules now, and since they have the manufacturing power, they need the silver more than anyone. Silver is used in solar panels, electronics, and electric vehicles. China dominates all of those industries. They can't build these things with paper contracts. They need the actual atoms. That's why they are willing to pay a massive premium to secure it. Meanwhile, Wall Street keeps pushing the price down with short positions. It's a battle between a digital number and a physical reality. And one of them has to give way eventually. History shows us that reality usually wins in the end. Think about what happens when the Western market finally snaps. If the price has to catch up to China, the move will be violent. We're talking about a jump that could happen overnight. Are you prepared for a world where silver isn't cheap anymore? The window to buy at these artificial prices might be closing fast. Let's look at the data coming out of the Shanghai Gold Exchange. The numbers coming off the Shanghai Gold Exchange are record-breaking. In January, the price in China actually spiked past $125. And while Americans were looking at $80 or $90, the East was in a different world. This isn't just a small gap, it's a full-blown decoupling of the markets. Why would anyone sell silver for $80 in New York? If they can get $40 more per ounce just by shipping it to China? That's exactly what's happening right now. The physical metal is being vacuumed out of Western vaults. Look at the COMEX registered inventories for a moment. They have plunged by over 30% in just the last few months. We are now seeing silver stocks drop below the 86 million ounce mark. That sounds like a lot until you look at the paper contracts. There are hundreds of millions of ounces promised to buyers on paper, but the physical bars aren't there to back them up. In March, the delivery requests reached 60% of all available stock. Think about that for a second. If everyone asked for their silver at once, the exchange would be empty. The system is running on a razor-thin margin. To stop the bleeding, the big exchanges are hiking margins. They make it more expensive to hold a position to force people out. They want you to take a cash settlement instead of the real metal. But why settle for cash when the dollar is losing value? Investors in Asia aren't falling for it. They are demanding physical delivery at a scale we've never seen. In Shanghai, the silver premiums are consistently $5 to $10 over Western spot, sometimes even more. It's a signal that the physical supply is under extreme stress. Have you ever wondered why the paper price seems to drop on no news? Often, it's a massive sell order of paper contracts dumped at once. This pushes the price down even though no physical metal changed hands. It's a classic move to trigger stop losses and scare retail investors. But you can't scare away a solar panel manufacturer who needs silver. They don't care about a chart in New York. They need the material to keep their factories running, and right now those factories are in China. The demand from the green energy sector is exploding. Solar demand alone is expected to hit 450 million ounces. That is nearly half of the world's annual mine production. When you add in electronics and electric vehicles, the math doesn't work. The world is consuming way more silver than it's pulling out of the ground. We've been in a structural deficit for 5 years straight. Up until now, we've been living off of old stockpiles, but those stockpiles are finally hitting the bottom of the barrel. When the Shanghai shock hit $120, the world noticed. It was a glimpse into the future of silver pricing. The West is trying to keep the lid on the pot, but the steam is coming out. You might be seeing a correction in the paper price right now. But does a lower price make the physical metal easier to find? Honestly, it usually makes it harder. When the price drops, the smart money buys even more of the physical stuff. Smart money is moving into physical silver at a record pace. Have you ever wondered why the big banks are the ones selling the most paper? They have a massive incentive to keep the price looking low. If silver suddenly jumped to its true value, the banking system would tremble. Many of these institutions have short positions worth billions of dollars. If they had to cover those bets at $100, they would go bust. That is why we see these sudden price drops in the middle of the night. It happens when the New York markets are closed or just opening. A massive wall of paper silver is dumped to move the needle. But the physical market in Shanghai doesn't seem to care anymore. Eastern buyers are stepping in and buying every dip. They know the paper games can't last forever. The divergence between the East and West is now a permanent feature. It's like two different worlds operating on two different sets of math. In one world, silver is an abundant digital commodity. In the other, it's a scarce industrial metal used in every modern device. Which one do you think is closer to the truth? The industrial demand for silver is not something you can just turn off. Every single Tomahawk missile contains about 15 pounds of silver. Every high-end electric vehicle uses nearly 2 ounces. As global tensions rise, the military demand for silver is quietly surging. Governments are starting to realize that silver is a strategic metal. Yet, the US government sold off its strategic silver stockpile years ago. We no longer have a reserve to fall back on if things get tight. China, on the other hand, has been building its reserves for decades. They are playing the long game while the West plays the quarterly game. This is why the Shanghai price is a leading indicator. It shows where the price wants to go when the manipulation stops. When the premium gets too high, people start moving metal from west to east. This is called arbitrage, and it's draining London dry. Cargo planes are literally flying silver bars from the UK to China. They do this because they can buy it cheap here and sell it high there. This process continues until there is no silver left to move. We are reaching that breaking point right now. Recent reports show that vault levels in London are at 20-year lows. If you look at the charts, the downward trend is a straight line. At this rate, those vaults could be effectively empty by next year. What happens to the New York price when London has nothing left? The paper market will have to settle in cash or face a total collapse. Investors who think they own silver in a bank might get a surprise. They might find out that their silver was never actually there. It was just a line on a digital ledger. Meanwhile, the person holding a physical bar is sitting on a fortune. The Shanghai shock of $120 wasn't a fluke. It was a warning shot across the bow of the Western financial system. It was China saying that they won't accept the paper price anymore. If you want the silver, you have to pay the market rate. And the market rate is dictated by those who actually have the metal. Do you think the banks can keep this up for another year? The pressure is building to a point that seems unsustainable. The sustainability of the current paper market is being questioned daily. When you look at the silver to gold ratio, things get even weirder. Historically, silver has traded much closer to the price of gold, but the current gap between them is wider than it has been in decades. If silver were to return to its historical ratio, the price would be triple digits. China seems to be the first to realize that this gap is an opportunity. They are essentially trading their devaluing currency for hard assets. Every ounce of silver they pull from the West is a win for their reserves. Think about what happens to the US dollar if silver hits those levels here. It would mean the purchasing power of the dollar is falling off a cliff. That is exactly what the central banks are trying to hide. Keeping silver and gold suppressed makes the paper currency look stable, but a glance at the Shanghai exchange tells a very different story. Inflation isn't just a transitory thing in the world of commodities. It's a permanent loss of value that shows up in the price of real things. Silver is one of the most undervalued real things left on the planet. Even at $120, many analysts say it's still cheap. When you adjust for inflation since 1980, silver should be over $200. The New York price is barely hanging onto the bottom of that range. This creates a massive coiled spring effect in the market. The more they push the price down, the harder it will snap back. We saw a glimpse of that snap in the Shanghai market. It was a moment where the physical demand overwhelmed the paper shorts. If that happens in New York, the exchange might have to shut down. They have rules that allow them to halt trading if things get too volatile. They can even force investors to settle their contracts at a fixed price. Imagine owning silver and being told you can't have it at the market rate. That's why the silver squeeze movement has become so popular. People are tired of the manipulation and want the metal in their hands. Do you trust a bank to hold your wealth when things get hit by a crisis? The premiums in China are a signal that the trust is already gone. They are willing to pay the higher price just to ensure they have the metal. This trend is starting to spread to other Eastern markets like India. India's silver imports have hit record highs in the last 12 months. They are buying tens of millions of ounces at a time. Between China and India, there isn't much left for the rest of the world. The Western investor is being left behind in this global land grab. By the time the New York price hits 100, it might be too late. The local coin shops will be empty and the online dealers will be sold out. We've seen it happen during every major financial scare in history. The only difference this time is the sheer scale of the industrial need. You can't just stop making cell phones or solar panels. The world needs silver to function in the 21st century. The Shanghai shock was just the opening act of a much bigger play. It's a transition of power from those who print money to those who hold assets. The era of cheap, manipulated silver is coming to a messy end. Keep a close eye on the spread between the East and the West. When that gap finally closes, it won't be because China's price went down. It will be because the Western price finally exploded to catch up. Are you holding the physical metal or just a piece of paper?